So today I just did a bit of back testing and I found three potential trades that I could have taken. These all had all my consequences or almost all my consequences for my strategy. This trade three, the third trade I found, I would have made 0.75% or 750 fake paper trading bucks off of with a 1.5 risk reward ratio. The second trade, I would have made 575 fake dollars off of with a 1.5 risk reward ratio. And the last trade I found, I would have made uh, 2,500 fake dollars with a 2.5 risk reward ratio. And I also came across a trade that I am planning on taking in the future once the markets open at 5 o'clock. So for the first trade, I found, I'm sure there's a better way, but for now, all I know is I just have to scroll everywhere. Okay, so my first trade I found was on March 21st, and this was in line with my daily and weekly bias on USD Canada. I have currently it's in line with all three biases, um, because it's a short, and so it was in line with all three biases actually. This one went off of a liquidity sweep and a break of structure. Right here, you can see price jumps up, liquidates, break structure to the downside. This is also during New York and London overlap. This is probably arguably the best time to take a trade, and that's what I think so far at least. This is the most price action the market sees the most predictably. For now, I'm going to try to avoid trading in overlap and during Tokyo session because I just don't know the markets that well, and so I'm just trying to trade when it's most predictable and the market quickly. Here, and then you can find an entry price hits an order block and then comes back into an order block. Right here, you can see this is the order block last significant candle up, and then price exits it, the purple bar, and it enters back in. So I could have taken an entry off of here or off of here. And it also touches, it also goes well within equilibrium, so the price is heavily discounted. The only problem with this is that I do not currently see. I'm certain that I could find one if I went onto the right time frame, but I don't see a perfect fair value gap, and that's the one thing why I probably wouldn't take a 1% trade off. I would just take a 0.5% trade off of. And the other thing is on the 25th, there was no high impact news. In March 25th, there was no high impact news. There was only just regular news. So I wouldn't. I still would have probably taken a trade off of this. I wouldn't have taken a 1% on my account trade. It would only have been 25 or 0.5%. I want to say very conservative with this so far. And what I would have done is I would have put the stop loss above this high right here, and I would have targeted this area of liquidity, and it was done. It was done um, far below far below that. So I would have had a risk to reward ratio of 1 to 1.5, but I also could have gotten a lot lower than that if I had wanted to. For the second trade, I think it was pretty similar. The only thing that is different about this trade, I think I'd pretty much everything hit, everything looked right. But the only problem with it is that it is not in line with the weekly or monthly trend. It is in line with the daily trend and possibly the weekly, as you can see right here, but it is not in line with the monthly trend, which is why this also I would have been a lot more conservative with. But here, it's obvious you have a clear break structure to the downside, liquidity sweep, and then break instructions to the upside. This one has less order blocks here, but the order block is really just this whole thing. So you could have taken many different trades off of this. If I had to, I would have entered in off of here, although it's in the midnight section. It probably wouldn't. It's during midnight. It probably would have been the best idea to take a trade off of this, but price does. If I zoom in here, price does retrace back to. Sorry, this is a huge fair value gap, and price seems to stay within it a lot. And so this is a very obvious liquidity sweep. You can just wait for a break of structure to the outside and just long it. And there really aren't. I thought I had more confluences on this than I actually did. I suppose you could argue that it's within equilibrium, but this is really just a liquidity sweep plus breaking structure. It seems to be very predictable. It's a very obvious liquidity sweep, and it's during New York London overlap. So that's why I would have taken this trade. It really is in long position and the stands. I still think it should have been a solid trade to take, but I would have probably it'd probably be better off if I had more confluences, and that's why I would have had a. That's why it's a 0.5% trade rather than a 1% trade. This isn't correct. I think I messed some of these slides up, but this would have been a 0.5% trade with a 2.35 risk to reward ratio. And there was also no high impact news during this. And so that those are the only reasons the very clear liquidity sweep break of structure and no high impact news on New York London overlap is the only reason I really would have taken a trade off of this. And even then, I would only take a 0.5% trade. Over here, this is my first trade. This is probably the best trade, the one that I would have risked the most with, because I would take a short position here in line with my daily, weekly, and monthly bias. A lot of the price action happens during New York and London sessions, and everything else just sort of happens over here. So it kind of would have been a swing trade, but that's probably something that I'll probably do more in the future if I'm not going to be a full time trader. So I think this is a really good experience. It goes off of the liquidity sweep and the break of structure here. You can see a clear break of structure to the upside, or you can see a clear liquidity sweep, then it breaks structure to the upside. You can also see, I bet if I scroll up to a bigger time frame, this would be a fair value gap right here and right here that the price sort of taps back into before it goes back down. I'm sorry. If I This would have been a fair value gap that price taps back into. I'm sorry, I'm still a little bit confused. This is all very new to me. I haven't used trading views very much. So price would have gone down, liquidated, that came back up within this sort of fair value gap area. And then once it hits this area, which is about right here, and then it would break structure. So it would be about 9 when I would take the trade, and I would put it as a short position, and I would put take the stop loss up here, take profit at previous area of liquidity right here, and it would have hit, and I probably could have gone down even like 5x if I wanted to. So overall, this trade is probably a pretty solid trade. I would still take a 0.5% off of it, but I could take a 1% if I wanted to. There is also no high impact news on this trade or any of the trades. So I could maybe go 1% on these shorts and the one long, but I want to stay conservative, so I would only risk 0.5%. And then over here, I found one potential trade that I might want to take, which is get a clear liquidity sweep here. This is an order. This is the order block. It broke liquidity, broke structure to the downside. Unfortunately, I kind of missed it, so I'm waiting for a re-entry. This is one possible re-entry. It's within the order block, and it's right here. There's the fair value gap. So if it retraces back into here and then breaks structure, then I would short it. And once I short it, I would probably have to set my stop loss up here, and I could set my take profit all the way down here, and I could get a 1 to 1.2 risk to reward ratio. Um, and since I don't have any news coming out anytime soon, 13 today, FOMC tomorrow, that would probably change things up. I would have to wait and see if the FOMC really shook the market at all before I would take the trade. But once it gets up to here, I will take the trade and short it all the way down here. It's also another reason I would take the trade is because it's within equilibrium. This point right here, or it actually has to go a little bit past this fair value gap to be within equilibrium, but it's very, very close. So overall, I have a liquidity sweep, breakup structure, equilibrium, fair value gap, and an order block. So I have all five consequences. So that's why I would take this trade would be a 1%er and 1.22. So if this works out, I would in theory make about 1,200 stake bucks. Uh, Overall, this is really my first time ever back testing the market, just staring at it, going back and seeing what would happen. I haven't really worked with TradingView that often, and I still don't understand how the the market is still going, even when it's a 5 day week, or like I don't know what happens here. It just kind of disappears. So I still have a lot to learn. I still have to learn exactly how to use everything here, um, and how New York, London, and Tokyo sessions affect the market. Although all I really know is that London and New York are generally safer than in this black space or than Tokyo. So that's really all I know so far, and I still have a lot